You're trying to follow your plan with consistency, knowing that your edge will play out over time. Think about this. Even a strategy with just a 55% win rate can make you rich if you execute it with discipline. But if you treat each trade like a personal test of your intelligence or ability, you'll always be on an emotional roller coaster. And that, Douglas warns, is a fast track to ruin. Lesson 3. Focus on process, not outcome. Here's a hard truth. You can do everything right and still lose money on a trade. That doesn't mean your plan was wrong. It means the outcome was random. Success in trading isn't about winning today. It's about executing your process flawlessly over time. Douglas emphasizes that real traders don't chase wins. They chase consistency of behavior. They focus on what they can control, following the rules, managing risk, executing without hesitation. If your strategy has a statistical edge, your only job is to stick to it. Every trade becomes just another data point in the bigger game, and that mindset, that commitment to process over profit, is what separates winners from gamblers. Lesson 4. The market owes you nothing. You can study for months, analyze every indicator, follow all the news, and still lose. Why? Because the market isn't fair. It's not a teacher, not a parent, not a friend. It's just a reflection of mass psychology, billions of decisions, all colliding in real time. Mark Douglas reminds us that the market doesn't care about your hopes, your needs, or your effort. And that's a good thing. When you stop expecting the market to reward you, you stop feeling betrayed when things don't go your way. You stop taking losses personally. You start thinking objectively. This is where real growth begins. You're no longer reacting to the market, you're responding to it with clarity and calm. Lesson 5. Confidence comes from acceptance, not prediction. Most traders try to build confidence by being right. They think, if I win enough, I'll feel confident. But Douglas flips that idea on its head. True confidence doesn't come from being right. It comes from knowing you don't have to be right. When you accept that any trade can lose and you're okay with that, your fear disappears. You stop hesitating. You stop overanalyzing. You execute with calm precision, not because you know what will happen, but because you've accepted what might. That's the mindset of a professional. They don't try to control the market, they control themselves. Lesson 6. Detach from the need to be right. This one's big. Most traders tie their self-worth to being right. When they win, they feel smart. When they lose, they feel stupid. Right? But this emotional attachment is dangerous. It causes traders to hold on to losing trades, to avoid stop losses, to double down just to prove the market wrong. Douglas says, being wrong doesn't mean you're a failure. It means you're a trader, because even the best traders are wrong often. Detach your ego from the outcome, and you'll trade with more freedom, more objectivity, and more consistency. Summary: build your mental foundation. These lessons aren't just tips, they're the mental infrastructure of elite trading. Until you master these core concepts, no strategy will save you. But once you shift your mindset, accept uncertainty, think in probabilities, follow the process, you'll be trading like a professional, not a hopeful amateur. So as we move forward in this video, keep this foundation in mind. Every advanced lesson, every emotional challenge, every tool for discipline, it all builds on this mental framework. This is how you trade in the zone. This is how you win long term. Let's move to the next phase, mastering your emotions. If you've ever closed a trade too early or held on to a losing position just hoping the market would turn, if you've ever hesitated out of fear or jumped in out of frustration, then you already know your biggest trading battle isn't on the chart. It's in your mind. In this section, we'll explore how Mark Douglas helps traders confront and conquer their most dangerous opponent, their own emotions. Lesson 7. Fear of loss is a learned response. From childhood, we're taught to avoid mistakes. In school, mistakes are punished. In life, failures are judged. So it's no surprise that when traders face losses, they panic, they freeze, they react emotionally. But Douglas challenges this conditioning. He reminds us, in trading, losses are not mistakes. They are part of the process. Even a perfectly executed trade can result in a loss, and that doesn't mean you did anything wrong. When you reframe loss as a business cost, not a personal failure, The fear begins to lose its grip. You become emotionally free to take trades without the paralyzing need to be perfect. Lesson 8. Pre-accept risk to stay calm. One of Douglas's most practical tools, accept the risk before you place the trade. That means before you hit buy or sell, ask yourself, am I truly okay losing this amount? Will I still feel in control if this trade doesn't work? If the answer is no, you're not ready. When you enter a trade hoping not to lose, you're trading emotionally. But when you accept the potential loss up front, the outcome no longer controls your mindset. Whether it wins or loses, you remain grounded. This single shift, risk acceptance, can transform your trading from reactive to professional. Lesson 9. Overcoming revenge trading. Here's a trap most traders fall into at some point. You take a loss, it stings, and suddenly you're not trading anymore. You're fighting. Revenge trading is one of the most destructive emotional responses in trading. It's the urge to get it all back now. But, as Douglas warns, trading out of anger or desperation only leads to deeper losses. Revenge trading hijacks your brain. You abandon your plan, you overtrade, you increase position sizes, and before you know it, a small mistake becomes a major drawdown. The fix? Awareness. When you feel that emotional heat rising, step away, breathe, reset. Remind yourself your job is to follow the plan, not to win back losses. Lesson 10. Greed is just uncontrolled hope. While fear keeps traders from acting, greed causes them to act too much and too soon. Greed isn't always loud or obvious. Sometimes it's subtle, like refusing to take profits because it might go further, or doubling down because this could be the big one. Douglas says that greed is really hope that's disconnected from a plan. When you have a system, when you trust your edge, you don't need to hope, you just execute. Wanting more isn't wrong, but trading based on want instead of rules will always lead to emotional instability. Lesson 11. Emotional swings create inconsistency. One day you feel confident, the next you hesitate. Some trades feel easy, others feel terrifying. Welcome to the emotional roller coaster that destroys most traders. Douglas explains that inconsistent results come from inconsistent mindsets. If you're always reacting to wins and losses emotionally, you'll never be able to build a repeatable process. The key is emotional neutrality. That means a win doesn't make you reckless, a loss doesn't make you fearful. Each trade is just one of many. Emotional neutrality is not about suppressing feelings. It's about observing them without letting them control your behavior. Lesson 12. Detachment is power. Detachment is not about being cold or careless. It's about freedom. Freedom from outcomes. Douglas reminds us, you are not your trades, you are not your P&L. When you can truly separate your self-worth from your performance, trading becomes clearer, cleaner, calmer. This emotional distance gives you the power to make decisions based on logic, not fear, not greed, not ego. You don't fear losses because you've accepted them. You don't chase wins because you know they'll come if you stick to your process. Detachment isn't a lack of passion, it's the highest form of mental discipline. Lesson 13. Self-awareness is your superpower. Most trading mistakes don't happen because of bad strategies. They happen because of blind spots, emotional triggers you haven't yet noticed. Douglas teaches that self-awareness is the first step to emotional control. That means asking, why did I hesitate here? Why did I exit early? Why do I feel anxious before every trade? When you can answer those questions honestly, you begin to see your emotional patterns. And when you can see them, you can change them. Keep a journal. Note your emotions. Over time, you'll see the loops: fear, revenge, greed, hesitation, and learn how to break them. Mastering emotions is not a destination, it's a practice. You will always feel. There will always be nerves, excitement, doubt, but that doesn't mean your emotions have to control you. Mark Douglas teaches us that the goal isn't to eliminate emotions. The goal is to become aware of them and act independently of them. That's how professionals think. That's how you build consistency. That's how you gain true confidence, not from results, but from emotional control. When you master your emotions, you unlock your true edge. And now that we've laid the emotional groundwork, let's move into the next phase: developing discipline and execution, the engine of consistent trading. In trading, it's not what you know, it's what you do consistently that counts. You can have the perfect trading strategy, you can master your emotions, But if you don't have the discipline to execute your edge, none of it matters. Discipline is the glue that holds it all together, and without it, even the most skilled traders fall apart. Let's dive into how Mark Douglas breaks down the true role of discipline in trading and why execution is your most valuable asset. Lesson 14: Discipline, Intelligence. A common trap for traders is believing that intelligence alone leads to success, that if they just learn more, read more, analyze more, they'll win. But Douglas reminds us this game doesn't reward the smartest, it rewards the most disciplined. The market doesn't care how much you know, it only responds to what you do. If your actions don't match your rules, your knowledge is useless. Discipline is about acting according to plan, not feeling. It's the ability to follow through when everything in your brain is screaming to do the opposite. Lesson 15: Build structure, then submit to it. One of Douglas's core beliefs is that structure creates freedom. When you build a system with clear rules, entry, exit, risk, you remove the need for emotional decision making. But here's the key: you must submit to that structure. It's not enough to have a plan. You have to trust it, even when it feels uncomfortable, even when your last 3 trades were losers, even when your gut says, just this once, let's skip the stop loss. Discipline means trading like a robot, even when your human instincts beg for control. Lesson 16: The market tempts you to break rules. The market is like a never-ending casino, flashing signals, sudden reversals, tempting patterns. Every minute, it gives you a reason to doubt your plan, to enter too early, to skip confirmation, to chase price. This is not a flaw in the system, it's the nature of the game. Douglas teaches that discipline is not just about resisting losses, it's about resisting the market's constant seduction to act impulsively. Every time you break a rule, you weaken your confidence. Every time you follow your plan, you build it. Lesson 17: One trade means nothing. A common emotional mistake is giving too much weight to one trade. It goes well and you feel invincible. It goes wrong and you question everything. But Douglas says one trade means absolutely nothing. The outcome of a single trade is random. It's only over dozens, even hundreds of trades that your edge shows up. Discipline helps you zoom out. It allows you to treat every trade the same, whether it's your first or your 50th. Consistency in behavior creates consistency in results. Lesson 18: Remove the gray area. Many traders fail because their plans have too much flexibility. They say things like, I'll see how the market feels. I might take profit early if it looks weak. I'll widen my stop if the candle wicks a little. This gray area is where discipline dies. Douglas says ambiguity breeds inconsistency. A well-structured plan removes interpretation. It tells you exactly when to enter, where to place your stop, when to get out, and most importantly, when to do nothing. The less you leave to chance, the easier it becomes to stay disciplined. Lesson 19: Track behavior, not just results. Too many traders only review their P&L, but Douglas argues profit is a lagging indicator. Behavior is the leading one. Instead of asking, how much did I make? Start asking, did I follow my plan perfectly? Did I respect my stop loss? Did I trade from logic or emotion? Keeping a behavioral journal helps you identify patterns in your execution. Over time, this data becomes your mirror. It shows you whether you're becoming more disciplined or drifting into inconsistency. Lesson 20: Discipline is a daily practice. Here's something Douglas says that hits hard. Discipline is not a switch, it's a muscle. You don't become disciplined once and for all. You practice discipline every single trade, every single day. And like any muscle, it grows stronger the more you use it. Start small. Commit to taking only trades that meet your setup. Commit to never moving your stop. Commit to logging every trade you take. You don't need perfection, you need consistency. That's how discipline turns into habit. Lesson 21: Discipline protects you from emotional swings. The true power of discipline isn't just consistency, it's emotional freedom. When you trade with rules, you remove the drama. You're no longer chasing highs or panicking on dips. Douglas explains that disciplined traders experience less stress, not more. Why? Because they've already decided what to do before the trade even begins. The market becomes less threatening when you know that you control your actions, no matter what it does. Discipline is the engine of your edge. Without discipline, your strategy is just a theory. With discipline, it becomes a machine. Mark Douglas reminds us that successful trading isn't about perfection, it's about executing a plan regardless of how you feel. And the more you practice, the more automatic it becomes. This is where real traders are made, not in the setup, not in the analysis, but in the moment of decision. So the next time you're tempted to deviate, ask yourself, do I want to feel good right now or win long term? Choose discipline every time. Next, we'll explore how to handle wins, losses, and market randomness with emotional maturity in part 4, risk and money mindset. Let's be honest, money is emotional. It represents survival, freedom, dreams, even self-worth. So when you risk money in the market, you're not just risking numbers on a screen, you're risking how you feel about yourself. Mark Douglas teaches us that unless you change your relationship with risk and money, you'll always be one bad trade away from emotional disaster. Let's break down how to develop a healthy risk mindset and why mastering this is non-negotiable for long-term trading success. Lesson 22, fully accept the risk before you enter. Ask yourself, before I place this trade, am I truly okay with losing the amount I'm risking? If the answer is anything other than a confident yes, you're trading with emotional resistance. Douglas says, until you accept the risk, you're not free to trade. When you hope not to lose, you're emotionally tied to the outcome. That creates tension, anxiety, and bad decisions. But when you define the risk clearly and mentally accept the loss, you remove the emotional pressure. Now you can focus on execution instead of protection. Lesson 23. Losses are business expenses, not failures. Most traders treat losses like personal attacks. They get frustrated, angry, even ashamed. But Douglas reframes the entire concept. Losses are simply part of the business. Think of a restaurant owner who buys food inventory. If some of that food goes unsold, is it a failure? No, it's just the cost of doing business. As a trader, your job is to take setups with an edge. Some will work, some won't. Losing is not failing, it's math. Once you internalize this, every loss becomes emotionally neutral. Lesson 24, release emotional attachment to money. This one is deep. Douglas explains that most traders lose because they care too much about the money. They see a trade not as a probability, but as a paycheck. And when money equals identity, every tick against you feels like a personal crisis. Here's the truth. Money is not your self-worth. It's just the scorecard. The market doesn't care what the money means to you. It simply rewards consistency and execution. If you're emotionally tied to money, you'll hesitate on valid trades, exit winners too early, or hold losers too long. Detaching doesn't mean not caring. It means not panicking. Lesson 25, risk what you can emotionally afford to lose. Douglas introduces a powerful test. Can you lose this amount and still execute your next trade without hesitation? If not, you're risking too much. Many traders focus on account size or percentages, but emotional tolerance is just as important. Risk must match your emotional capacity. It's better to risk less and execute well than to risk too much and blow your discipline under pressure. Reducing position size doesn't make you weak, it makes you smart. Lesson 26, avoid the all-in mentality. Have you ever thought, if this trade works, I'll recover all my losses? If I just double size on this setup, I'll make back what I lost yesterday? This is the trap Douglas warns about, risking too much because you want too much. This mindset turns trading into gambling. It's rooted in emotion, not strategy. Professional traders never go all in. They go in with precision, with a plan, and with predefined risk. The moment you start trading to get back at the market, you've already lost. Lesson 27, winning streaks can be dangerous too. We talk a lot about losing, but what about winning? After a series of wins, it's easy to feel like the market is easy. You loosen your rules, increase your size, get sloppy, and then the crash. Douglas reminds us overconfidence is just as dangerous as fear. After a winning streak, return to baseline. Review your process. Were the wins from skill or luck? Don't let euphoria blind you to risk. True professionalism is measured by how you behave after both success and failure. Lesson 28, define your maximum daily risk limit. Do you know when to stop? Douglas recommends setting a daily loss limit, a clear boundary that says, if I hit this amount, I walk away for the day, no questions asked. Why? Because the longer you stay after emotional damage, the worse.
सो अभी ट्रेडिंग साइकोलॉजी भी इसलिए लगा के रखे हैं सो दैट थोड़ा सा दिमाग ठंडा रहे। और 3730 आज मैंने शुरू किया था, ऑलमोस्ट 32 समथिंग थाउजेंड से। और उससे मैं अभी 50 तक पहुंचने वाला हूँ। आई थिंक अगर ये बहुत बढ़िया रहा, तो अगर ये यहाँ तक रहा तो मे बी वी कैन गेट अप टू 65 to 70 ऑल्सो। ये देखो, इस एरिया पे वैसे ये इंपॉर्टेंट एफवीजी है। एफवीजी जो है ये 5 मिनट के टाइम फ्रेम पे है। इन 5 मिनट टाइम फ्रेम, इन ये 5 मिनट के टाइम फ्रेम पे है, ठीक है। ये ध्यान में रखने की चीज़ है। तो ये एक इम्पोर्टेंट चीज़ मुझे लग रही है। ये एक यहाँ पे, और ये अपने को यहाँ पे ध्यान में रखने वाली चीज़ है। तो अभी तक तो बढ़िया चल रहा है। ये यहाँ से बढ़िया अपसाइड में जाएगा, क्योंकि ये वाला एफवीजी तो मिटिगेट हो गया है, ऑलमोस्ट मिटिगेट हो गया है। और थोड़ा बहुत रिजेक्शन तो ठीक है, एक्सेप्टेबल है। ये 50,000 पे हम ऑलरेडी चल ही रहे हैं। और ये एफवीजी पे तो ये लाइकली था रिजेक्शन आना ही आना है, बट चल ठीक है, वी आर गुड टू गो। एंड बढ़िया वेट कर सकते हैं, स्टॉप लॉस हमारा लगा ही हुआ है, सो नो वरीज। अभी क्या करते हैं ना, अभी स्टॉप लॉस को थोड़ा सा ड्रैग कर देते हैं। स्टॉप लॉस को थोड़ा सा इसके बॉटम में कर देते हैं यहाँ पे। अभी स्टॉप लॉस को थोड़ा ट्रेल कर देते हैं यहाँ पे। तो थोड़ा थोड़ा ट्रेल करते रहेंगे तो बढ़िया रहेगा। चल तो रहा है, बढ़िया चल रहा है अभी। अभी मज़ा भी आ रहा है। मज़ा भी आ रहा है। सो लेट्स सी, देखते हैं, धीरे धीरे चलने देते हैं इसको। एफवीजी के पास से थोड़ा बहुत रिजेक्शन आना तो लाइबल था ही था। और ये वाला अपना स्टॉप लॉस गया है। और इस पे हम थोड़ा सा वेट करेंगे, बढ़िया अगर गया तो $200 तक का प्रॉफिट आ सकता है। और हमें रेशो 1:3 तक का मिल जाएगा। बहुत बढ़िया, 1:3, 1:3.5 एक्चुअली। बट थोड़ा सा बैठना पड़ेगा, ठीक है। वोलेटिलिटी अभी खत्म हो गई है मार्केट में। इनिशियली जब यूएस मार्केट खुलता है तो इमीडिएट से बहुत ज़्यादा वोलेटिलिटी आता है। उस टाइम हमने छोटे मोटे ट्रेड कर लिए। बढ़िया, अब देखते हैं, अगर ये सेकंड वाला भी अगर स्टॉप लॉस जाता है तो देन फिर हम इसको क्लोज कर देंगे। देन फिर कल देखते हैं। आई थिंक ईएमए का सपोर्ट तो मिलना चाहिए, 9 और 20 ईएमए। होपफुली मिलना तो चाहिए, बट अगर एफवीजी, ये अगर एफवीजी बहुत ज़्यादा स्ट्रांग निकला तो देन तो डेफिनेटली फिर ये नीचे आके रिजेक्शन ले सकता है इधर से। बट होपफुली मैं तो ये होप कर रहा हूँ कि रिजेक्शन ना ले, यहाँ पे सस्टेन कर जाए। बिकॉज इंपॉर्टेंट एफवीजी ये है, इसकी तरफ ही जाना चाहिए इसको। व्हाट आई एम होपिंग, वर्ड गलत है होप, बट आई थिंक इसको मैं थोड़ा सा ड्रैग करके वापस पुराने वाले पे कर दूं क्या। क्योंकि बहुत जल्दी ट्रेड कर दिया था शायद मैंने। एक बारी मार्केट अगर इधर पहुंच जाए तो फिर ट्रेड करना ठीक रहेगा। मार्केट अगर यहाँ पे पहुंच जाएगा ना तो देन फिर ट्रेड करके थोड़ा बहुत यहाँ तक खिसका देंगे। फिलहाल तो चलने देते हैं इसको। एक 200 ईएमए भी लगा देते हैं हम इंडिकेटर में। 200। तो 200, दिस इज 200 EMA। टू हंड्रेड EMA से ज़्यादा नीचे तो नहीं आना चाहिए, बिकॉज अगर 200 EMA से नीचे फॉल हो ही रहा है तो देन तो फिर डेफिनेटली कुछ गड़बड़ है, हमारी हमारे ट्रेड के प्लान में ही कुछ गड़बड़ है फिर। बट 200 EMA से सपोर्ट तगड़ा ले सकता है डेफिनेटली। अब दो चीज़ें देखो, सस्टेन दो चीज़ें बढ़िया है। अपसाइड में भी मोमेंटम है, 200 EMA का भी बढ़िया सपोर्ट मिल सकता है। और जो ये पॉइंट्स हैं, आई थिंक दीज आर दी पॉइंट्स जिसको आपको ध्यान में रखना है। होपफुली अभी मैं 200 EMA के सपोर्ट के लिए ही बहुत ज़्यादा पॉजिटिव हूँ। 200 EMA पे इसने पहले भी आके सस्टेन करने की कोशिश की है, तो अभी होपफुली FVG को भी इसने मिटिगेट कर दिया है, तो 200 EMA का वापस जा तो सकता है। आई थिंक आई शुड रिमूव दिस थिंग, पहले तो इसको भी हटा देता हूँ सो दैट चार्ट ज़्यादा से ज़्यादा क्लीन रहे। तुमसे मिलकर दिल का है जो हाल क्या कहें, हो गया है कैसा ये कमाल क्या कहें। आज तो इसने मन बना ही लिया है, स्टॉप लॉस लेगा ही लेगा लग रहा है भाई। लेगा लग रहा है भाई। उठ जा रे 200 EMA से उठ जा, उठ जा रे अप साइड में उठ जा। वेरी गुड, वेरी गुड, बहुत बढ़िया। फेक आउट भी हो सकता है, एक फेक सेलिंग क्रिएट करके क्योंकि देखो मार्केट अपसाइड में तो जाना ही जाना है। अब ये हो सकता है हमारा स्टॉप लॉस लेके जाए, बट मोस्टली सेलिंग इंस्टिगेट करके कम प्राइसेस में लेके फिर मार्केट अपसाइड में आ सकता है। और ये देखो इनडिसाइसिव कैंडल, दिस इज इनडिसाइसिव कैंडल, ठीक है, डोजी टाइप हो गया। और इस सिनेरियो पे मैंने मोस्ट लाइकली देखा है अच्छा ऑपोजिट डायरेक्शन में जाता है। आई थिंक ये पुराना इंस्टिगेशन करके, और ये एक ध्यान में रखने वाली चीज़ है, ये वॉल्यूम कैंडल्स है, दीज आर नॉट नॉर्मल। अभी क्या है कि वॉल्यूम नीचे देखो डिफिकल्ट रहता है, तो इसके मोटाई से हमें पता लग जाता है कि कहाँ पे कितना ज़्यादा वॉल्यूम था। ये देखो रेड में कितना मोटे हैं, ये ज़्यादा वॉल्यूम वाले हैं, ग्रीन ज़्यादा वॉल्यूम वाले हैं, छोटे छोटे कम वॉल्यूम वाले हैं। अगर ये अपसाइड में वाले कैंडल्स धीरे धीरे मोटे होते जाएंगे तो वी कैन मेक आउट कि इट इज गोइंग विद अ गुड अमाउंट ऑफ बाइंग, या ज़्यादा मोमेंटम है इसमें, या ज़्यादा क्वांटम है इसमें। तुमसे मिलके दिल का है जो। चलो तो ठीक है भाई, मैं इसको लाइव पे छोड़ रहा हूँ, और आप लोग मार्क डगलस की ट्रेडिंग साइकोलॉजी समझो।
To join our AI Amplifier Club for a
Good morning, traders. Thank you for joining us on this WTV special on putting your mind over the market. I'm Jared Levy, Chief Options Strategist here on Wise Trade TV, and using psychology in today's market is not an easy thing to master. It takes a lot of discipline and skill to become a consistent and successful trader. Here to talk to you about what you need to do in order to put your mind over the market is Mark Douglas. Mark has been a successful trader since the 80s and has written 2 books on trading psychology, both Trading in the Zone and The Disciplined Trader. You've heard me talk about them many times here on WTV, and he is here today to help you become successful traders. Mark, good morning. How's it going?
Good morning, Jared. Glad to be here, and I hope I can be of assistance to some of your traders who are viewing right now.
Mark, you know, last time we were together was at Wise Fest, and had a lot of fun. I'm really excited you're here with me today.
Thanks.
So let's get started. First of all, you know, one of the main issues that I see all the time is that people don't use their method to its full potential. In other words, there's a negative correlation between what the trader ends up with and what he could have had if he just followed his methodology. Right. In your DVD program, you refer to this as the profit gap. This is a problem. You refer to it as the profit gap. And I think it's one of the least understood concepts of trading. Can you address this a little bit? This profit gap?
Yeah, that's actually a really good place to start because I think that more than anything, what your viewers want or what your customers want are consistent results. They want to be able to produce an income that that they can rely on from their trading. And I'm sure that many of your viewers have already realized that getting a steady income is not such an easy task.
Yeah, and everyone seems to get trapped thinking that because trading is easy.
Right.
Or because it's easy to find yourself in a winning trade, exactly. Which many people do.
Right.
You know, that they think it's also easy to become a consistent winner.
Right.
And you know, it took a long time before it actually dawned on me that winning and being a consistent winner are 2 completely different animals, 2 different things. And in some ways, there isn't even a relationship between the 2.
It almost seems like there's no relationship between the 2.
Yeah.
That's what you're saying, right?
Yeah.
Yeah, that's a real hard mental barrier to break through. Mainly because, it's so easy to find yourself in a winning trade because winning actually requires no skill at all. In other words, unless you consider that, the being able to click a mouse button or, tap a pad is a skill. Right. And we don't have to have a reason or good reason or even actually any reason to put your cursor on the buy or sell button and then immediately find ourselves in a winning trade. And it could be a monster of a winning trade. And what did it take? What kind of skills did it take to actually experience this? Absolutely none.
Yeah, so it'd be natural to take the leap from, well, if it's this easy to win, it can't be that much harder to make a steady income. Like you said, it's that easy to click the mouse. For me to sit there and make $5,000 or $10,000, then it must be pretty darn easy for me to sit there and make a living out of this. And that's what I thought for a long time, but that is not the case.
No, and that's exactly how I started out too. And I know, not unlike a lot of other people who are willing to, let's say, give up a real high-paying career to be a trader because they thought it couldn't be that hard.
So what makes consistency so challenging? What's the big hurdle there?
Well, we're going to get into that, but at the most general level, I'm going to say that it requires learning the type of skills that people just simply aren't used to learning.
Mental skills.
Mental skills, yeah, exactly. In other words, it requires mental skills. Most people assume that because their technical method gives them a signal to get into a trade, that if the method produces a high percentage of winners, it will equate to a consistent income, not taking into consideration that the proper execution of those signals requires mental skills.
Give us an example of this.
Well, take for an example, a high school basketball player who, he'll go in the gym and practice throwing his free throws, maybe for even 2 or 3 hours a day. It wouldn't be unusual for him to be able to hit 50 in a row, would it? I mean, that's
You
not
see that all the
out of the
time.
realm of reality, right? Okay, so the problem is that could he even hit 2 in a row if the circumstances were he was in the final game of the NCAA championship, his team is down 1 point, there's only a few seconds left on the clock, and he was just fouled.
Changes everything.
Yeah, under those circumstances, without the appropriate mental skills, hitting either one of those free throws is very unlikely. And regardless of how well someone could do it in practice, most people would choke.
So really the skills you're referring to, what you're talking about, Mark, is actually staying focused on the process, staying positively focused on the process itself, in this case of throwing the ball, in our case obviously of trading or following your method,
right,
and not being worried about blowing it, about the consequences of what could happen if this trade goes wrong.
Exactly right, just like what I'm going through right now.
Here
trying
on
to stay
TV.
focused, yeah, trying to stay focused on the process of this presentation and not blowing it.
But you're doing fantastic, by the way.
Anyway, with training, we may have a technical method telling us what to do and giving us the potential to generate consistent results. But like the basketball player, without developing the appropriate mental skills, it's unlikely we'll be able to do what our method, our trading plan is indicating without making a number of potential execution errors. In other words, to stay positively focused on the process of trading by doing exactly what we need to do, when we need to do it, without hesitation, reservation, or fear.
Okay. That's interesting.
So you see, no matter how good a technical method is at generating winning trades, turning those winners into a consistent income requires the ability to do or not do some things that the method itself can't help us with. For example, our method can't force us to predefine the risk of getting into a trade. Or if we do predefine the risk, our method can't force us to take the loss that ends up turning into a bigger loss.
Right.
And that's happened to everybody. Okay? Our method can't prevent us from moving a stop closer to our entry point where we get stopped out and the market trades back in our favor. Our method can't prevent us from hesitating and getting in too late. Or our method can't stop us from jumping the gun and getting in too soon, where the signal to actually get in never really develops. And our method can't stop us from getting out of a winning trade too soon and leave money on the table. Nor can it prevent us from letting a winning trade turn into a losing trade without having taken any profit.
I know that all of our traders have experienced these issues. I know they have, and I think really what you're saying is that the methodology, and this methodology, folks, what we're talking about when we say the word methodology is the Wise Trade software, that's our method. And it can give us winning trades. We've seen, I know all of you have had winning trades, but it cannot give us consistent results if we're susceptible to making the kind of mental errors that you're talking about here. Okay?
Exactly right. Yeah, that's exactly what I'm saying. And all the mental errors I just listed are the result of thinking, believing, or assuming that our technical method is telling us what's going to happen next on a trade-by-trade basis, and not understanding that technical methods aren't designed to do that. Right. Technical methods and patterns are designed to put the odds of success in our favor over a series of trades. It may not seem like it on the surface, but there's some profound psychological implications here. What this means is the outcome of the signals generated by any technical method on a trade-by-trade basis are unique and random. In other words, there's no way to know in advance what the outcome to any particular signal will be or what the sequence of wins or losses will be over a series of trades.
It's a mouthful. and I understand what you're saying. And I think, we need to, first of all, know that many of our viewers out there are experiencing the same sort of thing, okay? And they're probably going to have some trouble grasping this concept that by accepting the randomness of these outcomes, they can produce consistent results. That's an odd concept.
Yeah, but that's exactly what I'm saying, Jared. I know it's somewhat of a paradox to think that events that have a random outcome can produce a consistent result, but think about it. This is the principle that's been used by casinos for hundreds of years.
Right.
Technical methods and patterns will give the individual trader the same kind of advantage the casino has over the individual player, if the trader can think about it from the proper perspective. On the other hand, if a trader who has generated his signal from a technical method hasn't learned to integrate this principle, this randomness principle, into his trading regimen, he'll undoubtedly find that trading can be one of the most frustrating, if not exasperating, endeavors he's ever chosen to undertake.
You know, and I know there are a lot of viewers out there who may be experiencing frustration. In fact, I know there are definitely viewers who are experiencing frustration, but I'm not sure if they're making the connection that the reason because, you know, they don't believe in this randomness principle where you can generate consistent returns by looking at the outcomes of their trades as random and unique. Right. They have to be able to view that as random and unique. You know, that's, I think, the big issue.
No, I know, and that's why we're here explaining it right now. You see, the frustration comes from our expectations. It's from expecting something from our technical method it just can't do. Technical methods define and identify patterns in collective human behavior. Right. Now, the patterns definitely exist. They repeat themselves over and over again. The problem is the outcomes don't always correspond with the patterns on a trade-by-trade basis. So what I'm saying is that, yes, we have patterns, yes, and they repeat themselves over and over, and our minds just naturally think, well, I have a pattern that's consistent, I should have an outcome that's consistent with the pattern, right. and that's not what I'm saying at all. What I'm saying is that there doesn't have to be a relationship between the outcome and the pattern.
Right. So, you know, and if the last trade was a winner, right. This trade, even if the charts are the same, right. Even if we've got the same exact signal, the same looking chart, there's no guarantee that this trade is going to be the exact same as the past one.
Exactly. In other words, this trade, the trade I'm in right now, could turn out to be a winner. And does that mean that the next trade is going to be a winner? Absolutely not. This trade I'm in right now could end up being a loser. And does that mean that the next trade is going to be a loser? No, absolutely not.
Yeah. This is interesting. I mean, I'm trying to... For us up here, you know, the goal, the main goal is obviously to take these concepts and reduce them down to the most simple of terms. So, you know, let's again back up here for a second. There are traders out there using WiseTrade every single day. They're getting the same exact patterns, okay? But what you're saying is even though the specific criteria is being used to identify the pattern, okay, for each signal, same criteria, same formula, same everything.
Right. The chart pattern can look exactly the same. Everything.
Right. The outcomes to each signal have no relationship to one another.
That's right. That's exactly what I'm saying. That there's a random distribution between wins and losses over any sequence of trades that you might look at. And so, you know, and again, this is a very difficult concept to grasp, but it's really the traders who have grasped it, let's say, and learn how to think in what I call probabilities. Okay. They're the ones that don't experience the same kind of, you know, the same kind of emotional trauma that the typical trader does because they're expecting something that just may not happen. So, for an example, if this trade's a winner based on this particular trade I'm in right now, based on the exact same criteria that, you know, or let's say I'm in a trade right now, or I'm getting into a trade right now, and the exact same criteria exists in the market that did the last time, I'm going to naturally expect it to be a winner if it was a winner the last time. Or I probably will naturally expect it to be a loser if it was a loser maybe the last time, or we had 2 or 3 losers in a row.
And this could be a source of frustration for traders.
Oh, absolutely. In other words, and that's exactly what happens. It is a source of frustration because if I'm expecting it to be a winner and it turns out to be a loser, I'm going to be frustrated. Not only going to be frustrated, I'm going to be disappointed, and I may even feel betrayed, depending on how much kind of energy that I put into the idea that the trade is going to be right.
Well, how do we get over that? I mean, how does a trader take, you know, okay, so I've done all the things right. I've got my charts lined up. I've done everything I was supposed to do. How does the trader at least begin to accept these sorts of things, or how do they begin to remedy these issues?
Well, we kind of have to get into the nuts and bolts of this, of just exactly how the markets work, because I think that one of the big problems, one of the reasons why people have such a difficult time with this is because their initial exposure to the markets themselves is through electronics.
Right.
In other words, through electronics, there's a real disconnect between what you're actually participating in and what's causing, you to want to participate in the first place. In other words, markets started as exchanges. Right. And there were, and so when you traded at an exchange, so you know that all prices are people-generated events.
Correct.
They are, and see, this is what people have to take into consideration. Everything happens because of what people believe. When you look at the nature of trading and break it down to its simplest components, what you have is everyone trying to do the same thing. There is no possible way that any of us can make money as traders unless we can buy low and sell high, or sell high and buy low.
Correct.
Is there any other way, Jared?
No.
No other way.
In every market.
In every market. So basically, everyone's trying to do the same thing, are they not?
Yes.
Everyone is doing the same things. Now, the reason why we have price movement is because everyone has a different idea about what is high and what is low. Okay?
Right.
So now I get exposed to a technical method. Now, what does this technical method do? And this is the relationship that people need to grasp. If they grasp this relationship, then they can grasp this idea that you can take the same set of criteria and end up with random results. And it's this. It's like what people realized years ago is that you can take data points. In other words, data points meaning what you're doing is you're translating the human the human behavior, the human belief in if I'm going to buy
into something visual.
What's that? No, it doesn't have to be visual, but it's like it could be. Yeah, it started out being visual. It started out being chart patterns based on bar charts. But what you do is that if I'm going to buy, it's because right now, let's say the last price is 10, and I put in an order to buy something at 10, okay? It's because I believe that the market's going to go to 11, correct, or it's going to go to 12. Right. Certainly if I thought or I believed it was going to go to 9, I would wait, would I not?
Correct.
So the reason why I'm buying at 10 is because that's what I believe. In other words, all price movement is based on people's belief about what's going to happen in the future.
Now you said to me in a conversation we had yesterday, obviously we as individual traders are not large enough in our accounts to move the market.
Exactly. And
okay,
so this is the next connection that people have to make, is that since all price movement is based on people's conviction or belief about the future, how do prices actually move? For an example, when you put in an order or I put in an order, I don't trade at a level where I can actually move prices. But what the typical screen-based trader doesn't understand is that there are traders, there are thousands of traders out there who do move prices, and that it is their intention to move prices. Or you can have a large group of traders coming into the market and then cause prices to move. But what actually has to happen for prices to move is this, is that if the last price of something is 10, for the market to actually move to 11, all the offers have to be taken out, meaning that, or move to 12, all the offers at 11 have to be taken out. So in other words, people who are trying to sell at 11, they have to get their orders filled before it can get to 12. Right. Well, for someone to actually bid it to 11 or bid it to 12, they are doing the exact opposite, and this is really critical. They are doing the exact opposite in that moment of what it takes to be successful. Okay. They're not buying low, they're buying high. They're buying high relative to the last price. Or buying higher relative to the last price.
So how does understanding this concept, how does understanding what moves the markets help our traders to take it to the next level? Is this the first step for them getting control and understanding how the markets work and getting a grasp?
Yeah, they definitely have to understand. They have to understand how prices move, because when they understand how prices move, then they'll understand how their technical method relates to this movement. Because what technical methods do, whether it's a visual pattern or moving averages or any wise trade or whatever, you're using mathematical formulas. Okay? You're taking data points. In other words, you're taking what people believe about the future, transforming them or transposing them into a data point. As a price over time, okay, or with volume. There's any number.
Fresh cross.
Yeah, there's any number. That's what it ends up being, as a fresh cross. But I'm talking about the actual mathematical formula that makes the fresh cross. Okay. So there are any number of variables that go into this equation. Now, what people have found is that, and this is here. What people have found is that using these data points into certain types of mathematical equations, you can find patterns in collective human behavior. And what these patterns mean is this, is that when this set of criteria, okay, is present in the market, that there is simply a higher probability than not. In other words, there's a higher probability, or what I'm going to call an edge, a higher probability of one thing happening over another, that other people are actually going to come into the market and bid it higher from here or offer it lower from here. There's just, in other words, when the pattern is present, this collective pattern is present, it will repeat itself. But the problem is that it repeats itself on a random basis because even though the actual mathematical criteria is exactly correct or exactly the same.
You can't, mathematical models can't predict human beings.
That's right. Mathematical models can't predict who the actual individuals who are going to come into the market and actually do it.
Right.
In other words, it takes someone to do it. When you put on a trade, if you're not going to make your trade a winner by bidding the market, if you bought something by bidding the market, you know,
using all of my money.
Using all of your money you know, if you bought something at 10, you could actually wipe out all the offers and bid it to 11 or bid it to 12 or bid it to 13. Now, if the price is at 13, all the trades that you put on at 10 are winners, right?
Yeah, but I still bought it at 11 and 12.
Yeah, but well, you're averaging up. But the point is, all the trades that you put on were winners. You actually made yourself a winner.
That's correct.
But what I'm saying is that when you don't trade at that level, we are actually obliged to other traders to come in to buy something at a worse price than what we thought was low to make us winners.
So what you're saying is most of us out there are dependent upon someone else to move the market for us. We're trying to identify that pattern, obviously using the Wise Trade software to find those common entries. But again, it's a random event. But we're putting the edge, you said, in our favor.
Yeah. Jared, when you put on a trade, okay, when you put on a trade, do you know who, now what we've done, we've reduced the market down to these terms, okay, that it takes someone else to make us a winner, right?
Correct.
Okay. When you put on a trade, do you think about who that might be, who might come into the market to actually make you a winner?
No, of course not.
Yeah, no. And if it turns out to be a winning trade, do you know who those traders were or who that trader was that actually made you a winner?
No.
Is there any way to know?
No.
There might be, but it'd be pretty hard to find out, right? I mean, you could go to the clearing firm, you know, the firm that clears the
bottom line is
bottom line. Yeah, exactly. So what I'm saying is that when the pattern presents itself, like, okay, I have an edge here. When the pattern presents itself, we don't have any idea of who is actually going to come into the market to do this for us. And so there's no point in analyzing. There's no point in judging. There's no point in trying to figure out whether it's going to work or not. It would be like, for an example, if I said to you, Jared, I'm going to give you a coin, and this coin is weighted in a way where it's going to come up heads 70% of the time. Right. Now, just because I know mathematically and statistically that this pattern of coming up heads 70% of the time exists, is there still any way for me to know the actual sequence to heads to tails?
Of course not. It's an infinite.
Well, no, I'm saying, do I know the sequence? In other words, I'm going to flip the coin 100 times, and statistically it's going to come up heads 70% of the times. I still don't know which flips are going to
heads.
Which flips are going to come up heads. They say which flips. It's not the times. Right. Which ones? In other words, we flip the coin once, it comes up heads. Flip the coin twice, it comes up heads. The next one's tails, the next one's tails, the next one's tails. In other words, we could have streaks of heads or tails, okay? We could have streaks in there. The point that I'm making is that there is no way to know the actual sequence.
But at the end of the day, we know we have 70%.
So what that does, that obligates us, if we want to be able to trade our methodology in an effective fashion, to be able to utilize this methodology in a way where we can extract the maximum amount of profit that it makes available to us based on the pattern that it identifies. We have to do it in certain ways. In other words, our mind has to be free to be able to execute these trades without making trading errors. And the trading errors come from believing that because the pattern is present, that it's going to give me a winning trade on this one. This trade is going to be a winner.
You can't think that way.
No, you can't think that way.
You can't think that
That's the way the typical trader thinks.
Right.
The typical trader thinks, I'm not going to put this trade on unless I think it's going to be a winner. Or why would I do it? And it skews our expectations. See, it messes our expectations
Let's back up a couple seconds here. There's some great stuff here, Mark, and I hope our traders are getting all of this. You're basically saying, and this makes a whole lot of sense to me, and I hope it's getting through to you guys, we have a tool that gives us an edge, whatever it is. Right. Even if that edge is 2% or 3%, I don't know if we can.
No, it's more than that.
Maybe more than that.
What do you mean more than that? It's lot more than that. It's far more than 50%.
Well, I was saying greater than 50. I was using edge is defined as,
I see.
yeah.
Okay.
So maybe 55 or 56% of the time.
Right.
Let's just say
and the thing is, it doesn't even have to be 50% to actually make consistent money. That's what people can realize too. That depending on what the ratio is between what you have to risk to find out if a trade is going to work and how much profit it generates when it does, you don't even need a 50% win-loss ratio. Right. As a matter of fact, back in the 80s, there are, one of the most famous traders from the 80s, Richard Dennis, on a percentage basis, 95% of his trades were losers. 95%. But the 5% that were winners were monsters. And he was able to put on trades at a 95% loss ratio and make, at the most at one point, I think around 1987 or 1988,
now,
he had $400 million.
Is that using his edge or his money management, or a combination of both?
A combination of all of it.
Okay.
And see, one of the things he did too, and this is something I ought to really qualify with, he would use orders to actually probe the market. See, there's one of the things, I don't want to leave what we're doing right now, but I'm going to just kind of divert just for a moment,
okay,
and so that people understand that one of the first things to be a successful trader that you have to learn, other than the fact of finding a good edge, meaning something that puts a pattern, a collective pattern that your edge identifies, that puts the odds in your favor, right, that there's a higher probability of one thing happening over another once this pattern is present in the market, is that you have to learn how to think in probabilities. In other words, you have to get your expectations aligned with the way the market actually exists.
Right.
And when you do, in other words, when you learn these kind of mental skills and you're able to execute your trades without fear and without hesitation, without analyzing, or even without thinking for that matter, because you don't need to think. I'll give you an example. A professional trader, what a professional trader thinks about when there's an edge present is, does he think about whether the edge is going to work? Absolutely not. Because he knows, he has learned there's no point. Right. There's no point in analyzing or judging or building a case for or against whether that trade is going to work, because he understands the human component. Okay. Right. But what he does think about is he thinks about the risk. How much do I have to risk? How far am I going to let the market go against this position to tell me that other traders are either going to come into the market and make me a winner or not? And he also has a plan for how he's going to take profits.
Right.
But the typical trader, what does the typical trader do?
They don't have a plan.
Well,
or they think about the trade too much. They think about, is this going to be a winner? Is this going to be a loser for me?
The exact opposite of the professional.
So what the professional does is basically...
And then once they make up their mind that it's a winning trade, they don't predefine their risk, do they?
Right.
And they also don't have a plan to take profits because they think when
it's going to be a winner.
It's going to go on forever.
And I want to talk about that. We're running up on the break here, but I want to talk about that on the other side. But what you're saying is the bottom line is the professional sees the entry. He sees the pattern, whatever it is, the edge, enters in, not thinking if I'm going to win or I'm going to lose, but has a money management strategy in place, knows exactly how much he wants to win or is willing to win and how much he's willing to lose or risk.
Right.
Exactly. Now, does he put a cap on the upside? Does he put a cap on his win side?
It's not a matter of a cap. It's a matter of how, his assessment of how much potential there is. Okay. In other words, see, the problem is on a winning trade, we're obligated in a sense to make these never-ending decisions as to what the risk-to-reward ratio is. In other words, as the market's going in my favor, what's the risk of finding out that it's going to go further? And that's why so many professional traders or people who teach trading advocate scaling out of positions.
Right. Mark, this is all great stuff. We're going to have to wind it up. We got to go to a break, guys. It's already time. As I said, for a break. We'll be back with much more with Mark Douglas here in 3 minutes. We'll see you soon here on WTV.
Okay, trading skills. Who are the professionals? We already talked about that. And why would it be beneficial to think like a professional trader? We already talked about that. What's the answer? Anybody can make money, okay? We kind of already established the fact that anybody can make money as a trader. Yeah, we're talking about consistency. What we want to do is we want to close that profit gap. We want to make sure that our bottom line results reflect the potential of our methodologies. Okay? And that's what the professional has learned how to do. The professional has learned how to close that profit gap. They have learned the appropriate skills to do that. They're people just like you and me, okay? They're no different. They really aren't. They've evolved into a different way of thinking about trading. That's the reason why they can do it. And you can do it too, with understanding and awareness. That is really primarily what this workshop is about anyway. Because when you think about it, if you've read stories of people who have aspired to greatness as a trader, you'll always find, with almost all of them, that there's this underlying thread, this underlying theme that virtually all of them have lost one or more of what they considered a fortune before they started becoming consistently successful. Why do you think that underlying thread or theme exists in their lives? What's that? Why do you think that commonality exists? Because at some point they lose so often and then come back from losing, that one, they gain the confidence that they can do it, and as a result, the fear dissipates, and as soon as the fear is gone, they're trading from a carefree state of mind, and when you trade from that carefree state of mind, everything about your trading changes. Remember that the primary skill that we're talking about here is simply trading without fear. This is a trading skill. It is the primary skill that you will have to acquire to create consistency, to trade without fear.
You're watching Wise Trade TV.
Welcome back to the WTV special on putting your mind over the market. I'm Jared Levy. Mark Douglas has been talking about psychology in today's market. Mark, let's continue with our conversation we left off with. We were talking when we left about the flip of a coin. Right. And you said that you had a coin that was actually weighted on one side. You gave an example how a coin was weighted on one side, and over a series of flips, that coin had a 70% chance of, in this case, landing on heads.
Right.
Whereas in our software, we give you the edge, and maybe with our software, you have a better chance of being right or having a winning trade if you get in on a certain pattern.
Right.
You also talked about how
It's the word right that's really critical here. Okay.
Right.
It's the word right. In other words, what people need to understand is how does believing in a random result affect your expectations? Because see, what we don't want is we don't want to get into trading with the possibility of being disappointed, or the possibility of being dissatisfied, or being even betrayed, because a lot of traders feel that way. They really feel betrayed. And the problem is that when that potential exists, it has the effect of affecting the way that we see market information in detrimental ways. Because, in other words, all of us have these mental pain avoidance mechanisms that affect our perception of information. Right. So, for an example, if I'm in a losing trade, and I got into this trade thinking I was going to be right. Okay. In other words, I did all my evaluation, I did all my analysis, I did my work, I built a case. Right. It's like as the market's moving against me, I'm going to have the tendency to focus on information that tells me that I'm right and ignore the information that tells me that the market is actually trending against me. Okay. In other words, I can identify a trend, but I won't be able to identify that trend if I'm putting an inordinate amount of significance on the information that's telling me that I'm right, as opposed to ignoring the information that's telling me that I'm wrong. And see, and overall, if we want to be consistent, the principle that we need to keep in mind is that to be consistent, we have to cut our losses and let our profits run. We have to make more on our winning trades than what we lose on our losing trades. And the problem is that if I'm susceptible to being disappointed or betrayed, meaning I get into a trade, expecting it to do what I think it's going to do, that I'm going to have this tendency to distort market information that causes me to hang on to my losers. And in a winning trade, what will happen is that instead of letting a winner run, markets don't go straight up. In other words, if I'm in a long trade, right. I would like the market to go straight up, but they don't. They go up and they come back and they come, and it's the retracements we focus on instead of the fact that the market's still trending in our favor.
So what you're saying right now, basically, is I found a stock, for instance, that I love. The stock just had a great news story. The charts are the same as the other stocks that I've traded, but just for some particular reason, I feel great about this stock. Don't know what it is, but maybe they had some great news out, and I feel that stock starts to go against me. You know what? Based on the news that's out there, based on the special feeling I have about this stock, I continue to hold my loser. I continue to hold my loser until this thing draws down against me, and I'm in a major losing position. And I keep losing because I feel in my mind that I had some sort of special. This stock was special. Is that what you're referring to?
Well, yeah, it could be anything.
Because I know traders do that out there.
Yeah, I know. It could be any variable kind of information that people latch onto. Okay. The thing that they have to understand is regardless of the reason that they got into a trade, it doesn't, regardless of the reason, if other traders don't buy into that reason, or if other traders don't have another reason to want to buy at a price that's worse than yours. You bought the stock at 10. Right. Someone's got to want to buy it at 11. Someone's going to want to buy it at 12 and buy it at 13. And not only be able to buy it at 11, 12, and 13 and 14, they're going to have to take out all the offers, all the traders who think it's high. In other words, at 11, 12, and 13. And so if these people aren't coming into the market to do that, well, then whatever reason you thought you had might not be so good. Right. And so that's why it's so critical to predefine your risk before you even get into a trade. And that's why professional traders don't think about it any other way, because they know it takes other people. That my reason might be great, but if someone else isn't buying into it, what difference does it make? It doesn't matter, because it's not a winning trade. And so, if we have this susceptibility to be disappointed, what it does, it affects our perception of market information in a way that doesn't allow us to cut our losses.
How do we make ourselves not susceptible? I mean, how can you
by changing your perspective on this, by really understanding. For an example, Jared, you ever played a slot machine?
Yes.
Okay.
Now, I don't like it.
You might, okay.
But I played it.
Whatever reason you don't like it, doesn't matter, okay? That's good that you didn't like it, because it might make the example even better, okay? Okay? You play a slot machine. When you put your money in the machine, let's say it's a quarter machine, okay? You put your money in the machine, you press the button, and the pattern indicating that there's a payoff doesn't show up. How do you feel? Well, do you feel betrayed? Do people betrayed by the machine?
No, not at all.
And why do you not feel betrayed by the machine?
It's just a random, it's
a random outcome. Okay. So in other words, you went into it with the belief that you know that you're participating in an event with a random outcome.
Right.
And as a result, your expectations about the outcome were in perfect alignment with the event itself.
My expectation, believe it or not, was to lose. I know this sounds crazy, but when I put the quarter in, I thought, you know what, I'm probably going to lose this quarter.
Yeah, exactly, because the odds aren't exactly in your favor. And what trading systems can do is actually put the odds in your favor in a way where we own the machine. Believe it or not. I mean, this is the whole role reverses if you learn to think about it correctly. In other words, if you understand that, so for an example, well, let me backtrack a little bit and say that most traders, if you compare trading to a slot machine, the difference would be that with a slot machine, we can't play until we've accepted the risk. In other words, we actually have to take our money out of our pocket and put it in the machine, or otherwise we can't play. Right. So that implies that we've accepted the risk, because the degree to which we have not accepted the risk, we wouldn't be able to put our money in the machine.
That is our loss. The quarter is our loss.
That's the risk. No, that's not our loss. That's just the risk. That's just how much we're willing to invest to find out if it's going to work. Okay?
Okay.
And then what we do is we wait for a pattern to show up. And if the pattern's, a jackpot, great. If it's not, then we might be willing to put another quarter in the machine to find out if it is. The difference with trading, and this is where people's mental idea of what this is all about gets messed up. The difference with trading is that the pattern shows up in the market.
First.
The pattern shows up first, okay? Then what we have to do is put up our money, meaning how much am I willing to risk to find out if it's going to work? But most traders, because they evaluate, because they judge, and because they analyze, they think that and build a case for the pattern being right. They actually talk themselves out of believing that the risk even exists. They might give lip service to the idea of putting a stop in the market, like some of those errors that I said in the beginning. Right. How many people put stops in the market and take them out, and then and then let what would have been a small losing trade go into a big losing trade? That's lip service. You see, well, okay, I've been told over and over again I got to put stops in the market, so I'm going to do it. But they haven't really accepted the risk.
Right. We see it every day. Every day.
Yeah, they haven't really truly accepted the risk because they don't want to be wrong. And what they have to understand is that this is not a right or wrong game. This has nothing to do. Trading a technical methodology or a technical pattern does not have anything to do with being right or wrong. It's just an odds game. That's all it is. In other words, you get an edge that says I've got the odds in my favor over a series of trades, but you've got to be able to take every single trade because you don't know the sequence to wins and losses. You got to be able to identify what your risk is, and that's simply how much am I willing to spend to find out if other traders are going to come into this market and bid it higher than my price or offer it lower than my price if I sold. That's all it means. And then, of course, you have to have a money management plan for how to take consistent profits.
Right. Which
is
another problem I want to say.
Oh, yeah. But see, the thing is like when you change your perspective, when you change how you think about this, okay, it's like I know there's a random outcome to these patterns. And so I know it's not right or wrong. And so what potential do I have to get disappointed? No more potential than what you had to get disappointed by putting a quarter in a slot machine and it didn't come up with a jackpot.
Right.
And see, this is the critical thing here, Jared. You got to be able to change the way you think. This is what's the title of this program? Mind over markets. Okay, you got to be able to change the way you think.
And how does a trader do? I mean, what are the steps? I mean, is there obviously by reading your books, by getting themselves immersed in your thinking, is certainly a way to do that. Is there anything from this point forward a trader can begin to do, or thoughts that traders can try to add to the repertoire to begin to think like a professional trader, have that carefree state of mind, and start to change the way that they view the markets and their risk? Is there an exercise they can do?
Yeah, absolutely. I mean, there's an exercise in trading in the zone, exercises in how to think like a professional trader, and basically all it really takes, Jared, is simply a sincere willingness to do it. Honest to God, it's just it's just like anything else in our lives. When we realize that there's a particular goal that we have, and there's a strong desire to achieve that goal, then we're going to take whatever steps we need to achieve it. Whether those steps are trading in the zone or how to think like a professional trader or some other methodology that people are more comfortable with or whatever. The point is that if someone really sets their mind, any of us, when we really set our mind at getting something, we'll get there. We will get there, but the difference is, like we started out in the beginning of the program, the difference with this is that what we have to set our mind at is how to change our mind. Okay, and that's why there's so many people who are so close to getting it, but never really get beyond that
What's
threshold.
That hurdle? Why can't?
Because people don't want to change the way they think. It's that simple. People don't like changing.
How can people get to the carefree state of mind that you talk about?
By changing the way that they think. They've got to eliminate the potential to think that the market's going to disappoint them. They've got to eliminate the potential to think that the market's going to disappoint them. And the way they eliminate that potential is by understanding that trading is not about being right or wrong. It's a probability game. Right. If you're trading technically. Now, I don't want to confuse people, but I got to say something else. Is that traders do
evolve.
You got
an hour and a half, by the way. Keep going.
We do? Oh, okay. Yeah. You got that long, honest to God?
Go ahead.
Oh, my. No, is that there are stages of development. In other words, and I think I started to talk about this in the last segment, is that there are stages of development. That we start out learning these fundamental skills, like learning how to think in probabilities so that the market doesn't have this potential to cause us to feel emotional pain.
Right. We did everything we could. We had our edge. It didn't work out.
That's
move
right.
on.
And that's all it is. When you put on a trade and it doesn't work, all it really means is this, is that some other traders didn't come into the market that had the same belief that you had or the same conviction that you had about this market doing whatever it is that you thought it was going to do. That's all it is. It's nothing more than that.
And you have to learn to walk away.
And you have to learn to walk away. I mean, let's put it this way. How good do you think the average person is at predicting other people's behavior? Someone else's behavior. People aren't that good at predicting other people's behavior. or even their own behavior for that matter, okay?
Exactly.
They find themselves doing things that, what am I doing this for, you know? And so how good are they going to be at predicting collective human behavior? Now, the methodologies that we have access to, these mathematical formulas, do that for us.
Right.
But you have to understand that there's no possible way that these mathematical formulas can predict the outcome of these patterns on a trade-by-trade basis, only on a series of trades. In other words, what they're really saying is that I have the odds. So when I get a signal from my methodology, at the very most fundamental level, what this is telling me is that
fresh cross.
There's a higher there's a high, or let's say the odds are in my favor. The odds are in my favor that somebody is going to come into the market. This is what the pattern means.
Right.
The odds are in my favor that somebody is going to come into the market and bid it higher from here if I bought, or offer it lower from here if I sold. That's all it's saying. Now, they're either going to come or they're not. And so, as a result, I don't look at this as being a right or wrong. I look at this as how much distance am I going to give the market to move away from my entry point to tell me that they're either going to come or they're not, and any further is not worth the money of finding out. It's not worth the cost of finding out. That's all it means.
Do you talk about stop losses? You talk about stop losses and management in your DVD.
Yeah, absolutely, but not like
very
specific. Not the kind of specifics that, you know, like if you're in a half an hour time frame, you know, how much.
Well,
how
that's
much
the trader's decision.
Yeah.
But the trader, dependent upon their trade style, is going to adjust their stops according to their account size, according to their risk tolerance, etc.
Right.
What you do, I think, is give people an understanding and a basis of where they should be placing their risk, or how much, not from a dollar perspective, but maybe from a
in other words, you know, so that they can, yes, from a mental perspective, so that they can adjust their trading style in a way that conforms to where they're at in terms of their ability to take the risk.
Would one exercise be for a trader to begin testing out their loss? In other words, take a $100 loss, see how you feel. If you were able to take a $100 loss and walk away and not fret too much about it, not let it stress out the rest of your trading day and not think about it, maybe then you could say, okay, I'm willing to trade a more volatile stock and move to something like a $200 or a $300 loss, etc. Is that an exercise you think would be beneficial?
Oh, absolutely.
For the traders?
Yeah, absolutely. I mean, and that's what I suggest to people, you know, all the time. Especially, you know, I was doing coaching. It's like, and when I was doing coaching on an active basis, I mean, I was coaching some pretty substantial money managers, and you know, they'd get into a situation where they're on a pretty good losing streak, and often it required that they actually go back to a risk level that, you know, they hadn't. Meaning that if they were trading, you know, 10,000 or 100,000 shares, or willing to take, you know, $500,000 or $1 million hit on a trade, you know, to get back to where they felt more in sync with the market, that they may have had to go back to only trading 1,000 shares. And see, and when you're working in a corporate situation like that, you know, with other traders, that's often a hard thing to do, but that's exactly what they needed to do. I suggest to people that I mean, look at it this way: paper trading. Okay, a lot of people who teach trading say that, you know, there's no point in someone paper trading, because there's oftentimes a huge difference between the results they'll experience paper trading and what they'll experience when their real money's on the line. Yeah, because there's no real money on the line. In other words, I'm sure there are probably a substantial number of viewers out there who can make consistent money following their methodology, paper trading, and then they start doing real trading, and everything changes. Okay, well, and so a lot of teachers have said, well, there's no point in paper trading because, you know, there's no correlation between the results. Well, that's not really true, because what paper trading can do for people is very beneficial. One, it's a graphic demonstration of the gap that exists in terms of mental skills that they need to acquire. In other words, it's a good way to get familiarize yourself with your trading platform. It's a good way to really get confident with your methodology, but more so, it is a graphic representation of the mental skills that you don't have. That's
an interesting concept.
Yeah. So in other words, how does someone convince themselves that they need those mental skills?
Look at your paper trading.
Yeah, look at your paper trading in relationship to your real trading. Yeah. Now, if there's, and a lot of this, even if people have learned to think in probabilities, which is what we've been talking about pretty much this whole time, even if people learn to think in probabilities, it doesn't mean that they can really still accept the loss.
Right.
Because the way our minds think. In other words, if I have to take a loss on this trade, it could have the tendency to tap me into all the accumulative kind of negative pain of every time I've had to take a loss in my life. And it just doesn't mean in trading. It could mean, pets or what, people and that sort of thing, or jobs. And so, because our minds have this tendencies to associate, it can make it difficult to accept the loss. So a lot of times what people would have to do, and they also would find difficult to do, because a lot of times people get into trading because they want to impress their friends or their family, like, I'm a trader.
Right.
But what they might have to do is that when they graduate from paper trading, they might just, the amount of risk tolerance they have might only be just 10 shares and risking $1 on those 10 shares. And you think, well, what's the point of that? Well, the point of that is that, when you can trade those 10 shares flawlessly based on whatever your methodology says, and do it without any fear or
because you were able to make those trades in the paper. I mean,
That's
you
right.
made those trades in the paper.
Then you can go to 20 shares and see how that feels. Then you go to 30 and gradually work your way up. And people aren't willing to gradually work their way up.
This is a concept that we've never even talked about. I've never actually heard it put this way, Mark. I have to be honest with you, where you look at your paper trading account as almost your goal, if you will. Almost like, this is where I could be if I was trading from a carefree state of mind.
Absolutely. It's perfect. This is where I could be if I had that carefree state of mind. If I had the mental skills that allowed me to do exactly what I need to do without reservation, without hesitation, without fear. That's the way that we can, and that's, and that's basically what we're getting at. How do we use the methodology that we have and the capability and the potential of that methodology to its maximum? You need the mental skills to do it.
You made reference before, both at WiseFest and earlier we talked about some events of pain in your life. And a lot of our traders right now feeling some pain with what's been happening in the markets the past couple of weeks. Mark, is there, does a person have to experience this, a total drawdown in their account, a total loss in their account where their account's almost wiped out or is totally wiped out for them to make that change in their mind? I mean, does that have to happen? Does it have to be traumatic like that for them to realize, oh, I've got to change something? I'm saying this, and obviously it can be done without that, but have you found that predominantly out there, in the people you've taught over the years, have people had to experience a high level of trauma before they can actually make the change? Or can someone just in the normal course of every day with a little bit of dedication actually? And I'm not trying to be rhetorical here. I really want a serious answer, because there's people out there right now that I'm sure are thinking the same thing. Do I have to lose my whole account? Does this have to happen for me to make a
You're in pain right now, are you, Jared?
What's that? Yeah. I'm good. I've been out of the market all week.
I'm just kidding. Yeah, well, you mean like the gutter principle?
Yeah.
Is that what you're referring to?
Explain the gutter principle.
The gutter principle. In other words, how much in the gutter do you have to be before you're willing to say, I'll do anything? Mm-hmm. As a matter of fact, this kind of brings something up. Is that when I was actively coaching, my coaching clientele basically fell into two broad categories. One was with traders who were already successful, who were already consistent, and what they wanted were, they wanted fine tuning. Okay, they wanted creative ways of fine tuning themselves so that they could actually increase the amount of money that they make over a year, or whatever. And then you had the other group was they're literally in the emotional gutter. Okay, they're so exasperated, they're so frustrated because of the potential that it's so obvious what the potential is, and yet there seems to be these invisible barriers that keep them from getting into that potential. That they come to me saying, "I'll do anything." And that's, now everyone has different tolerances of pain before they get to the point where they say, "I'll do anything," and mean it, and be sincere,
and mean it. Well,
that's the whole thing. They got to mean it.
Mark, we're wrapping up the show. We have a couple more minutes now. There was a couple points I know you wanted to make before we end up this show. And guys, just so you know, next show we're going to open up to phone calls and emails. So if you want to start lining up your emails or your phone calls, do that now. Mark, a couple more minutes to go. In this arena, I mean, is there any message you can give to our traders or any final thoughts, maybe a mantra, something?
No, just basically, just to kind of, sum up what we've been talking about, that if consistent results are your objective, then you're going to have to learn how to think like a professional trader, because that's what they do. They make consistent results. That's why they're pros. That's why people give them their money to manage. That's why they have jobs where they actually trade for a living, because if they didn't make consistent results, they wouldn't keep their jobs. And so to do that, you have to learn to change the way you think about trading in a way where it doesn't cause you to have this potential to think that you're going to be disappointed or betrayed or put you into a state of emotional pain. It's like getting to that carefree state of mind. And once you get to that, once you
मगर आप अगर इंडिया के कई सारे जो ओपन बीचेस हैं वहां पर अगर आप हाई टाइड के टाइम जाएंगे तो आप देखेंगे कि जो लहरें आती हैं, अगर बहुत बड़ी एक लहर आ जाती है तो एकदम से एक बबली व्हाइट सा एक लहर पे है ना। तो ये क्या होता है कि जो भी सेडिमेंट्स वगैरह रहते हैं सब इकट्ठा करके एक लेयर बना देते हैं। इनकी जो डेंसिटी है वाटर से कम रहती है, तो जब भी लोग जेट स्कीइंग वगैरह करते हैं ऐसा अगर एक व्हाइट स्पॉट आ गया उससे दूर रहे, क्योंकि वो जेट स्की पक करके अंदर जा सकती है।
तो ये एक बहुत साइंटिफिकली रीजन देता है, शिप का गायब होने का रीजन देता है। आसमान में तो खैर परिंदे उड़ रहे थे, वो उनका रीजन
एंड दिस इज माय पॉइंट। ये जो थ्योरी है कि जो मीथेन जो रिलीज होते रहती है अगर ये बड़े पॉकेट्स में रिलीज हो जाए तो डेफिनेटली इसमें कोई शक नहीं है। इनफैक्ट इसे एक्सपेरिमेंट किया गया है, इसके ऊपर नेशनल जियोग्राफी ने छोटी सी डॉक्यूमेंट्री करी है जो आपको यूट्यूब पे मिल जाएगी। एक्सपेरिमेंट द्वारा ये प्रूव किया गया है कि अगर ऐसा कोई फिनोमेना हो तो शिप तो अचानक से गायब हो सकता है,
सडनली गायब हो सकते हैं और
बिना डिस्ट्रेस सिग्नल दिए। मगर प्लेन्स का क्या?
प्लेन्स का क्या? आप एक और बात कर देते हैं, जो बात साबित है, जो साबित है कि हाँ उस एरिया में मैग्नेटिक फ्लक्चुएशन होती है, ये बात है, ये सारी चीजें हैं। लेकिन अब आते हैं साइंटिफिक माइंड्स और साइंटिस्ट और दुनिया के बुद्धिजीवी क्या कहते हैं। सबसे पहली बात, बरमुडा ट्रायंगल इकलौता एक ऐसा रीजन नहीं है पूरे समुद्रों में जहां पर ये सब हुआ। बात ये कही जाती है, क्लेम क्या उठाया गया था कि बरमुडा ट्रायंगल समुद्र का वो रीजन है जहां पर सबसे ज्यादा एक्सीडेंट्स हुए। लेकिन देखा जब गया, डेटा निकाल के गया, तो पूरी की पूरी दुनिया में जितने भी एक्सीडेंट हुए थे तो ऐसा नहीं है बरमुडा ट्रायंगल में ज्यादा हुए, सबका एवरेज निकाला गया तो बरमुडा ट्रायंगल इतना ही निकल रहा है। बात ये है कि सारी की सारी
इसे कहते हैं स्टैटिस्टिक्स में स्टैटिस्टिकली सिग्निफिकेंट।
तो सब एक जैसा है, समंदर सब जगह एक जैसा है, ये साइंटिस्ट बोल रहे हैं। गलतियां एक्सीडेंट्स होते हैं और जाहिर सी बात ये होते हैं। इनफैक्ट जो हम बात करें कि मलबे नहीं मिले, बॉडीज नहीं मिली, जिन न्यूज़पेपर ने ये इश्तिहार छापे थे कि बरमुडा ट्रायंगल में ऐसा हुआ है वैसा हुआ, जब बाद में मलबे मिल गए थे, कईयों के मिले थे, तो उन न्यूज़पेपर ने कभी भी ये इश्तिहार नहीं छापे कि हमसे गलती हुई थी, मलबे मिल गए। क्योंकि एज आई सेड, मैं क्या इंग्लिश का डायलॉग बोला था कि मैं भूल गया, मिस्ट्री सेल्स बेटर देन मैथ्स। वही बात।
तो और ऐसा अक्सर होता है कि देखिए क्या है, हम भी ऐसा कर रहे हैं मिथ बस्टर्स की बात करके कि शायद आप लोग में थोड़ी और उत्सुकता जगे, आपकी थोड़ा आप और जानने की जिज्ञासा बढ़े।
हम आप तक आपकी ही बातों को लेके आना चाह रहे हैं और इसमें अब दूसरा रीजन क्या है।
मगर पॉइंट ये जो आप बता रहे थे कि जो मैग्नेटिक फ्लक्चुएशंस की बात है, ये एक्चुअली बहुत कॉमन है और इससे शायद आपको रेडियो मैसेजेस जो फ्लाइट 19 में भेजे थे वो समझ आ जाएंगे। सूफियान आप बता रहे थे कि ये वन ऑफ दो स्पॉट्स है जहां पर मैग्नेटिकली मैग्नेटिक नॉर्थ और ट्रू नॉर्थ काइंड ऑफ अलाइन कर जाते हैं।
यस, ऐसा देखो, पहली बात तो आपको बात करते हैं जब हम फिजिक्स की, तो ट्रू नॉर्थ और मैग्नेटिक नॉर्थ में अंतर क्या होता है। मैग्नेटिक नॉर्थ क्यों बनता है कि हमारी धरती के अंदर पिघला हुआ लोहा कह लीजिए है, और जब वो घूमता है लोहे के पास, आप समझते मेटल है, इलेक्ट्रॉन्स है, और इलेक्ट्रॉन काइंड ऑफ घूम रहा है, तो हमारी धरती के अंदर इवेंचुअली खुद का ही एक करंट है, छोटा मोटा मान लीजिए, और उस करंट के होने की वजह से जब पूरा का पूरा एक करंट बनता है, हमें सबको पता है कि करंट की वजह से मैग्नेटिक फील्ड बनती है, तो वो एक मैग्नेटिक फील्ड जो होती है वो धरती से मान लीजिए सीधे निकल रही है। हमारी धरती जिस एक्सिस के अराउंड रोटेट कर रही है, जो टेढ़ी है थोड़ी, वो होता है ट्रू नॉर्थ। यस। और जो मैग्नेटिक नॉर्थ है वो आप समझ चुके होंगे कि वैसे आता है जब अंदर धरती का मोल्टन लावा कह लीजिए, जो भी कह लीजिए, कोर जो है, उसकी वजह से जो हमारे पास लकीली है, जो हमारे पास मैग्नेटिक फील्ड है, मार्स के पास नहीं है, तो मार्स पूरा लाल हो गया गुस्से में, तो ऐसी बात है। तो ये सब चीजें होती है, तो ये मानते हैं कि होता क्या है कि ऐसे ऐसे फिनोमिना हो जाते हैं जो कि बहुत कॉमन है। समुद्र की दुनिया जमीन की दुनिया से बहुत ज्यादा अलग है, ये बात को मानते हुए रहना चाहिए, जिस चक्कर में ये वहां पर चीजें होती है जो कि साबित है। मगर ऐसा नहीं है कि सिर्फ बर्मुडा ट्रायंगल हो रहा है, धरती में हर जगह हो रहा है। और जाहिर सी बात है, रेडियो सिग्नल उस समय ऐसे भी नहीं थे जो कि इतने एडवांस हो, तो इस चक्कर में रेडियो। और एक और बात सुन, मैं आपको बताता हूँ, एक इंसिडेंस हुआ था, इंडिया में हुआ था, मैं शायद मैं भूल गया उस जगह का नाम, जहां पर क्या हुआ कि एक पुल बन रहा था, दो साइड से चालू हो रहा था, ठीक है। हुआ क्या, बहुत स्मॉल डिग्री का एरर आया इस साइड वाले पुल में, मान लीजिए, इवेंचुअली जाके जब मिले ना, तो मिल नहीं पाए।
मिल नहीं पाए मतलब कोई था ही नहीं चाह रहा।
हाँ,
ऐसे जुड़ रहे थे वो कि अब आप इसको मतलब मैनेज भी नहीं कर पाओगे।
इसलिए मैं आपको बोल रहा हूँ कि देखिए, जब समंदर में आपके पास इकलौता सहारा है कंपास का और रेडियो सिग्नल का, उस जमाने में आप अगर, जैसे हम बात करते हैं, एक डिग्री होती है, एक मिनट होते हैं, सेकंड होते हैं, क्या नाम है, एंगल की बात कर रहे हैं, तो अगर आप 1-2 मिनट एंगल का भी आप एरर कर दोगे, तो इवेंचुअली डिस्टेंस वो बहुत बड़ा डिस्टेंस बन जाएगा। और जो प्लेन्स, एक मान लीजिए, ऐसा कहते हैं कि जो प्लेन निकला होगा उस समय F-19 जो भी बात कर रहे हैं, उसमें हल्का सा किसी का क्या नाम है, डायरेक्शन का एरर आया होगा, मान लीजिए, क्योंकि ह्यूमन एरर हो सकते हैं, हल्का सा एरर, उसको एक दूसरी दुनिया में पहुंचा दिया होगा, दूसरे अर्थ के दूसरे कोने में, और जो रेस्क्यू करने गए थे वो दूसरी दुनिया में चले गए। ऐसी बात भी हो सकती है। मतलब एग्जांपल ले रहा हूं, वो तो खैर
मतलब क्योंकि क्या होता है, आप ये समझिए कि अगर कंपास में दोनों नॉर्थ अलाइन कर रहे हैं, तो ये इतना सा चेंज एक इतने तेज चलते हुए प्लेन को काफी हद तक डिरेल कर सकता है। और क्योंकि टेक्नोलॉजी लोकेशन की उतनी अच्छी नहीं थी, कम्युनिकेशन की उतनी अच्छी नहीं थी, ये हो सकता है। और वहां पर बहुत सारे छोटे छोटे आइलैंड्स हैं, तो जो विजुअल उन्हें रेफरेंसेस थे, शायद हो सकता है कि उन्होंने एक आइलैंड को कोई दूसरा आइलैंड मान लिया, क्योंकि आप आइलैंड पर तो हो नहीं, आप हवा में हो। उन्हें कंफ्यूज करके शायद फ्लाइट 19 बहुत बुरी तरह डिलेल हो गई थी। और एक लास्ट जो वहां पर फिनोमेना देखा गया है, वो ये है कि इत्तेफाक कह लो या फिर नेचुरल फिनोमेना कह लो, जैसा सुफियान ने कहा, इकलौती ऐसी जगह तो है नहीं है, मगर बर्मुडा ट्रायंगल इज नोन फॉर बीइंग एक्सट्रीमली रफ व्हेन इट कम्स टू इट्स वेदर कंडीशन। तो ये जो है, ये शिप्स का डिसअपीयरेंस तो एक्सप्लेन कर ही सकता है, और साथ ही साथ ये एयरप्लेन्स का डिसअपीयरेंस भी मतलब एक्सप्लेन कर सकता है, क्योंकि एक स्टॉर्म में एयरप्लेन का भी घूमना, एयरप्लेन का भी चलना, खास करके पुअर विजिबिलिटी में बहुत मुश्किल हो जाता है।
अरे मेरी फ्लाइट नहीं उतर रही थी उस दिन। उस दिन मेरे साथ अभी जो मेरा दोस्त बैठा था, विकास कुमार पांडे, बहुत खूबसूरत और बहुत अच्छा इंसान है वो, उसके साथ बैठा हुआ था। और जब हमारी फ्लाइट में पायलट ने बोल दिया कि देखिए भाई, ये क्या नाम है, हम जा रहे हैं सूरत, और थोड़े सिचुएशन अच्छी नहीं थी, एकदम बेल्ट मान लो, तो मैं और पांडे एक साथ मिलकर देख रहे थे कि क्या भाई क्या चल रहा है। तो हम मजे में थे, हम उतरे हैं तो तालियां बज गई हैं कि भैया स्टॉर्म अगर मतलब आ गया, तूफान आ गया, तो प्लेन जो है बहुत हिल जाते हैं, तो ऐसे चीजें नॉर्मल हो सकती है।
और इसमें एक और चीज ये होती है कि विजिबिलिटी से फ्लाई करना होता है बहुत मुश्किल। तो क्या होता है कि अगर इंटरनेशनल जो प्लेन्स चलते हैं, खास करके जब सी के ऊपर चलते हैं, उन्हें एक रेडार वॉच कर रहा रहता है, एक मिलिट्री रेडार रहता है, एक सिविल रेडार रहता है, एक कम्युनिकेशन आप अपने बेस से बनाए रखते हो, एक अपनी एयरलाइन से बनाए रखते हो, मतलब इतने सारे
इंसान कमाल है यार,
कमाल है।
उसने ईएमएफ ढूंढी, उसके बाद उसने बोला एक काम करो, देखो भैया व्हाइट ब्रदर्स, तुम इसको उड़ा पा रहे हो क्या, अब हम इसको पहुंचाएंगे। ठीक है, तो वो कर दिया इंसान ने। सिग्नल सोचिए आप, आसमान में जो प्लेन में आप कभी बैठते हैं, जो भी बैठते हैं, और जो चीजें होती है, वो सिर्फ और सिर्फ एक सिग्नल पे डिसाइड हो रहा है कि वो कहाँ जा रहा है।
और बैड वेदर पे ऐसा कई बार हो चुका है, जिसका एक बहुत बड़ा उदाहरण है एयर फ्रांस फ्लाइट 47 आई बिलीव, जो ब्राजील से टेक ऑफ करके फ्रांस की तरफ जा रही थी। बैड वेदर के समय इनके सेंसर्स में थोड़ी बहुत गड़बड़ आ गई, इनके विजुअल सेंसर्स थोड़े गड़बड़ा गए, ये वार्निंग समझ नहीं पाए और वो प्लेन क्रैश कर गया। और उसका रैकेज कई समय बाद मिला, तब तक लोगों को ये नहीं समझ आ रहा था कि भाई ये पूरा का पूरा पैसेंजर एयरक्राफ्ट कैसे गायब हो गया, और ये सब हुआ मुश्किल से 1.5 मिनट के अंदर. सो बैड वेदर कैन डेफिनेटली एक्सप्लेन फ्लाइट डिसअपियरेंस.
इनफैक्ट जैसे डॉक्टर साहब ने कहा कि वेदर की बात है, तो वहां पर जो है ना वो स्पेसिफिक रीजन में गल्फ स्ट्रीम बहुत ज्यादा है, जो इतनी ज्यादा है कि जो रीजन दे सकती है कि भैया वहां पर कुछ चीज एक्सीडेंट हुआ, तो पूरा का पूरा मलबा विदिन करके गायब हो सकता है. इतनी ज्यादा हाई टाइड्स, मान लीजिए जो तूफान की जो लहरें है वो इतनी ज्यादा है. आपको समझना पड़ेगा कि हमारी दुनिया, जो आप बैठे घर बैठे मस्त अपने घर में या किसी जगह बैठ के या ऑफिस में या स्कूल में बैठ के चीजें देख रहे हैं, उतनी आरामदायक, उतनी शांत नहीं है दुनिया. दुनिया में बहुत सारे तहलके मचते रहते हैं, तो इस बात को समझना होगा.
और लास्ट रीजन, और इस पर करते हैं वीडियो खत्म.
इनफैक्ट मैं नाम भूल जाऊंगा, NOAA नेशनल ओशन एंड एटमॉस्फेरिक एडमिनिस्ट्रेशन ने कहा था कि बरमूडा ट्रायंगल इज नो स्पेशल. ये चीजें पूरी धरती पे समुद्र के हर एंगल में हो रही है. तो इसको बात यही है कि मिथ बना के बेचा गया हुई भी चीजें, और उसकी वजह से इसको जब हम, आप वही मैं आपको एग्जांपल दे रहा हूँ कि आप अपने आप को देखिए, आप इनफैक्ट आप खुद भी ये बिलीव करते हैं कि बहुत सारे लोग बिलीव करते होंगे कि भूत होते हैं, यहाँ पर सुपर नेचुरल चीजें होती हैं. जब नहीं बिलीव करते होंगे तो आपके घर वाले, आपके दादा दादी नाना नानी बिलीव करते होंगे. तो ये चीज है कि इंसान हमेशा इस धरती से ऊपर रह के ही जीना चाहता है.
और एक लास्ट, इस पर फिर हम बात करेंगे कि क्यों साइंस कंट्रोवर्सी को ब्रेक करने में, मिथ्स को बस्ट करने में जरूरी होता है. कई सालों तक कई सारे सेलर्स ये रिपोर्ट,
मुझे गाली नहीं.
Nitrogen tank for
कानपुर में लैम्बोर्गिनी गाड़ी से एक एक्सीडेंट. आरोपी को पकड़ने के बजाय इस मामले महात्मा गांधी नेशनल रूरल एम्प्लॉयमेंट गारंटी एक्ट, या जिसे हम मनरेगा के नाम से जानते हैं, अब वो प्रैक्टिकली हे राम कह चुकी है. In July.
Last year, a group of adventurers with National Geographic were hiking Mount Everest when they saw a human foot sticking out of the ice. Now, it is not rare to see dead bodies on the mountain. There's at least 200 of them scattered around Everest, and many of them act as markers for the trails, frozen forever in time where they fell. But this human foot in particular had been on the mountain for 100 years and solved a century-old mystery. Welcome back to Heart Starts Pounding. I'm your host, Kayla Moore, and today it feels so good to be here inside of the Rope Detecting Society headquarters and not out on a mountain. Because today we're going to be talking about the bodies that are still stuck on Mount Everest, who they belong to, and the mystery that was solved when a 100-year-old foot was found. Just a reminder, if you like true crime cases that read like gothic horror mysteries that will keep you up at night, and let me check my notes here, reading about tragedy that happens on a completely optional hiking expedition, you're in the right place, because you are just like me. Wherever you are, make sure you follow along, leave a comment, subscribe, all of that good stuff. Now, typically I like to shout out listeners here, but I want to ask you a question today. Would any of you ever hike Mount Everest? Or if you have, please let me know, because after reading so much about this, I must hear from someone in this community about their experience. I personally would never hike Mount Everest. I even get anxiety when I look at pictures of the mountain, but I am deeply curious about the types of people that choose to make this hike. And so today in our episode, I also want to explore some of the motivations behind why these people do this extremely dangerous and totally optional feat that many of us find so unappealing. Okay, let's get into it. Mount Everest, located on the China-Nepal border, nestled in the Himalayas, is the tallest mountain in the world above sea level. Coming in at around 29,000 feet or 8,800 meters, that's right around cruising altitude for a plane. Climbing Mount Everest, and I cannot stress this enough, you guys, is an incredibly expensive endeavor. We're talking about $50,000 minimum if you want to get to the top. And a lot of people spend far more money than that. Among some of the most expensive things you need to complete the hike are at least $3,000 worth of oxygen, a $3,000 round trip plane ticket to Kathmandu, Nepal, and $30,000 for a permit and guide package. And honestly, that's the cheap option. There's some very wealthy people that will pay Western guides $1 million or more to make sure that they have every amenity available to them on the mountain. I mean, I found this one company called Furtenbach Expeditions that has a package at 200,000 euros starting that gets you up and down the mountain in just 3 weeks. It includes a private luxury tent, VIP travel accommodations, and they'll even make you a personal documentary of your climb. And that's just the reality of this mountain. While there are people who make it their life's mission to summit Everest, they save up for years for the chance to be able to climb. A recent criticism of the mountain is that it's become another extreme endeavor for the uber rich. Honestly, kind of like the Titan submersible, where some people feel like they can just pay whatever to get them to the top. But what a lot of those people find out is that being rich is not going to make you physically fit enough to survive once you're there. And that is where accidents happen. And that kind of brings me to the first body I want to tell you about, a woman named Hannelore Schmatz. For years, starting in 1979, as hikers got to 27,200 feet going up the southern route of the mountain, that's the route that 98% of hikers choose, a woman could be seen sitting in place, completely frozen. She was leaning against her backpack with her eyes closed and her hair was gently swaying in the wind. This is Hannelore Schmatz, and according to hikers that saw her, she looked like she could have just stood up and walked the few hundred feet back to the safety of her camp. But she died in a very preventable accident, and her body sat on the mountain, frozen and alone for years. Hannelore was a 39-year-old German mountaineer who wanted to become the fourth woman to ever summit Mount Everest. By October 2nd, 1979, she had made it through the arduous climb towards the summit. That's 2 to 3 weeks acclimatizing to the altitude at a base camp at around 17,000 feet, where her body started getting used to the lack of oxygen. There, she would have checked her equipment, she would have undergone some medical evaluations to make sure that she was physically fit. She may have even gotten a blessing from a monk. And then she would have made the very arduous 3 to 4 day hike to Camp 4, which sits at 26,000 feet on the mountain. And there she would have started her final push to the top, the morning of October 2nd. The previous day, her husband, Gerhard Schmatz, became the oldest man to summit the mountain at 50 years old. And Hannelore initially didn't know if she was going to actually try for the top of Everest, but after watching her husband do it, she decided that she was going to go for it. With her, she had an American climber named Ray Genet and 2 Sherpa guides named Sungdae and Ang Jambu. Her husband was not going to be joining her, so she radioed him back down at camp and said that she would see him when she made it back. But his voice sounded concerned when he replied. "The weather is turning. Maybe you should wait," he said. But Hannelore was in what's known as the death zone of Mount Everest, the area above 26,000 feet. And when you're there, you are quite literally dying every single moment. The air doesn't have enough oxygen in it to replenish your blood, so you need to rely on tanks of oxygen to supply you. And even then, you have about 20 hours in the zone before you're dead. Waiting does not exist in the death zone. You either push to the summit or you turn back to safety. Hannelore felt like this was going to be her only chance, so she decided that she was going to press on. By 1:30 p.m., she made it to the top, officially becoming the fourth woman to ever make the journey up. An incredible feat, don't get me wrong, but there's one thing that every seasoned climber knows about Everest, something every Sherpa will warn you about. You have to start coming down from the peak at 2 p.m. No questions asked. The sun starts setting really fast, and you don't want to be stranded up there in the cold. It's already negative 30 degrees Fahrenheit during the day, and it just gets worse at night. The descent down is also harder than climbing up, and after you've been starved of oxygen for a few hours, you don't want to have to navigate through rough terrain in the dark. Also, you're not going to be rescued up there in the dark. No offense, but no one is going to kill themselves trying to save you. The point being, Hannelore had to essentially turn right around and head back down the mountain. She didn't have time to rest once she got to the top. And as her group started heading down, they got more and more tired, and the oxygen levels in their tank were dropping really fast. Once Hannelore and Ray got to around 28,000 feet, they decided that they were going to stop. Night was quickly approaching, and they figured that they would sleep and then continue on in the morning. But their Sherpa guides begged them to keep going. No one survives a night in the death zone, especially without shelter, they said. But Ray and Hannelore chose to stay, even when one of the Sherpa guides turned around and kept going back to camp. Sungdaer, the other Sherpa, however, decided that he was going to risk his life and stay with them to make sure that they were safe. The next morning, Ray was dead. The cold had killed him, and Hannelore was barely hanging on. So Sungdaer did the only thing he could think to do and just grabbed her and started helping her down the mountain. But they only made it about 100 meters before she fell again. And that was just about 100 meters away from the safety of Camp 4. If she could just get up, they would make it. But it was too late. Hannelore looked at Sungdaer and whispered, "Water." And that was her last word. Sungdaer was able to make it back to base camp, but because he had been exposed to such devastatingly cold temperatures for so long while he was trying to help Hannelore and Ray, he lost most of his fingers and toes to frostbite. The bodies of Hannelore and Ray remained on the mountain for years after their death. Ray was eventually covered by snowfall, but Hannelore sat against her backpack near base camp for years, eyes open, staring at the hikers who would pass her, unable to help. In 1984, 2 Nepalese hikers in their 30s actually died while they were trying to recover her body. They wanted to bring her home to her husband, and they lost their lives while doing so. And this is a huge reason why bodies on the mountain don't really get recovered all the time. Sometimes it's just not safe, but another reason is that it is very expensive to do so. It costs a lot to get up the mountain, and if someone's family can't afford tens of thousands of dollars that it takes to safely send a recovery crew up to get a body, that body will just stay there forever. Now, eventually the wind blew Hannelore from her position down the east face of the mountain, where she still is today, though out of sight. The higher you climb into the death zone of Mount Everest, the more bodies you're going to see. At first, it looks like bright patches in the snow along the path that kind of look like garbage, but as you get closer, those patches start to take shape. They're all bodies, lying on their sides, half obscured by snowdrift. Some of them are wrapped in yellow climbing rope, like these Technicolor mummies. It is very scary to see. Some of these bodies are only partly visible, but others are just like how Hannelore was, completely visible and in near perfect condition. They look like they just laid down to take a nap. And that brings us to the next body that I want to tell you about in the death zone. It's a woman dressed in purple insulating gear and lying in perfect repose with her hands clasped.
A lot of people listen to this and Roger, the Big Bang has now entered common knowledge as the way that you
砸锅卖铁也要干场，这是。
have to land on the mountain. It's an awful way. हम मंदिर नहीं, हम कैंसर हॉस्पिटल बनवाएंगे।
और जब आप पर्चा देखोगे ना तो वो जो स्ट्राइक है वो मंदिर के पास नहीं,
221 लोगों की घर बात। चूज कोटा गेट वन अकाउंट खोलना 3 डेबिट कार्ड क्रेडिट कार्ड सब लाइक कोटा गेट वन डिजिटल बैंकिंग एफडीज लोन्स कार्ड्स म्यूचुअल फंड्स सब मक्खन। Get a metal debit card with Kotak 811. हम मंदिर नहीं, हम कैंसर हॉस्पिटल बनवाएंगे।
और जब आप पर्चा देखोगे ना तो वो जो स्ट्राइक है वो मंदिर के पास नहीं,
221 लोगों की घर वापसी।
और देखो भाई धीरेन्द्र शास्त्री खुद बोलते हैं But I love helping people. I love the concept of donating money. But I love helping people. I love the concept of donating money. I just can't do it. I want to, but my mom wouldn't let me. Every time I even just think about donating money, she comes out of nowhere. She's like, who are you donating to? I'm like, Mom, I don't know, like Save the Children Foundation? She's like, you don't even know those children. Children can be horrible. Okay, fine, Mom, I'll donate to help the hospitals, like feedahhospital.com, to help out all the nurses and doctors. And she's like, okay, chill. The doctors make more money than you. They should donate to you, okay? I make a website at feedacomedian.com right now. She just guilt trips me, you know? You donate to anyone, you donate to me. I give a purse to you, okay? Can you imagine I'm on Family Feud? Steve's like, Jimmy, what charity are you playing for? Feedacomedian.com. All proceeds go to my mom. My mom's so tight with my money, she wouldn't even let me buy her something nice. For her last birthday, I bought her a nice iPad, brand new iPad. I thought I was a good Asian son, right? And my mom's like, oh no, it's too expensive. I'm like, Mom, it's okay, we can afford it. Just enjoy the iPad. She was like, no, Jimmy, please return it. Return it and just give me the cash. We're practical. It's about the bottom line. See, we live in a very frivolous society, man. Everybody loves to brag about how much shit they have, how much money they make. We all brag. We're all guilty of this. We all just do it in subtle, different ways. Like white people, for example. White people never brag about how much money they got. They always just brag about how expensive their life is. Like, oh, Joey just started private school. It's so expensive. And our remodel is totally going over budget. Oh, and you wouldn't believe how much money we spent going to Fiji. I'm like, okay, Katie, I see your life, okay? It's a luxury. It's good for you, okay? Black people, on the other hand, a lot more straightforward. Black people just tell you exactly how much money they spent on something. It's great. You guys seen it? Like my black friends or even like rappers, right? They love to brag. They're like, this car, 80,000. My mama's house, 500,000. This chain, $1 million, man. I'm like, okay, you clearly don't have your priorities straight. But I appreciate the honesty. People love to brag about how much money they spend. Asian people, on the other hand, would do the exact opposite. We love to brag about how little money we spent on some shit. Because the art is in the savings. You never pay full price. Like my mom, her catchphrase is guess how much? Guess how much? You guys ever play guess how much?
my mom would come home with something new, like a watch. She would be like, Jimmy, guess how much? Guess how much? I'm like, Mom, I don't know. It's a very nice watch, like $5,000. And she was like, no, it's $200. Jimmy, my house, this house, guess how much? Guess how much? I'm like, Mom, I don't know. You live in a very nice house, like $1 million. She was like, no, it's half off. Someone died in it. And if you know the rules of the game, you always guess high. So you make the other person feel good about their purchases. Never guess too low. If you ever guess too low, that's the ultimate insult to an Asian person, okay? One time my mom came home with some new shoes. I guessed too low. I've never seen her so disappointed in me. She's like, Jimmy, guess how much? Guess how much? I'm like, Mom, I don't know. Very nice shoes, like $200. She was like, oh, you. Do you even know about shoes? These are $500 Jimmy Choos, okay? Better Jimmy than you.
Why is nobody talking about what this woman is doing? Stop doing this. Let me show 3 iPhone mistakes made by old people. Number 1 is deleting photos manually. Number 2 is deleting all the apps on the phone.
That's how we prank people. Gotta love it, man. I used to be embarrassed about all these things. I thought my mom was cheap. She spoke with an accent. She made me Chinese food. But when I got older, I realized it's all those things that made me different is what makes me interesting now. The tide has turned, man. Everybody want to be more Asian. I'm telling you. Yeah, that's right. Everybody want to be BTS. Everybody want to eat Xiaolong Bao. And every parent I know is trying to send their kid to Chinese immersion school. Just in case we take over this shit. You know what I mean? Gotta be proud, man. You gotta be proud of how you grew up. Gotta be proud of your parents, right? I'm a good Asian. I'm great to my parents. I'll never, ever disrespect them in front of them. You know what I mean? Like, I want to give you guys a quick update on my dad. Yeah? Richard Ouyang, yeah, the superstar of the family. Yeah. Talked about in my last special, he became an actor, right? Yeah, not because he loves the art, it's because it's so easy, you can do it, right? But now he's doing great, he's very successful, okay? He got his whole life turned around, he got out of retirement, he's a full-time actor now. And now, he wants to be an influencer. He just started his own IG account, which is just a nightmare. Because old people, I feel like they mean well, okay? Like my dad, he means well, but he just doesn't know how it works. Like his first post on Instagram was a very nice post. A beautiful picture of the sky, palm trees, birds flying by. I'm like, oh, this is nice. And I scrolled down to the caption, and he wrote, all lives matter. I'm like, Dad, what the fuck, man? Like, you don't even know what that means. Why would you write that? He was like, I know. My life will matter. Your life will matter. The bird's life will matter, okay? All life will matter. I'm like, that is not what it means. I made him put his account on private, okay? Just like a good tiger parent would. Because we know the rules, like young people, we see through the scams of Instagram, right? Like, for example, I follow SportsCenter. I understand the first 100 comments are all bots. They're all fake, right? Because there's always some IG booty model saying some stupid shit like, I want something long and hard. This is obviously a scam. So one time I clicked on it. Just to see what's going on, you know what I mean? Research. I just want to see it. I just want to get to the bottom of it. So I clicked on it. I was like, oh, this is obviously a scam. It's this girl. She's following 7,000 people, but she only has 1 follower. And I clicked on the 1 follower. It was my dad. You go to any Chinese restaurant, there's about 485 items on the menu. And there's one dude back there in the kitchen. He's not even a chef. He's somebody's uncle from Hong Kong. And he knows how to make everything in under 30 seconds. That guy's the real hero. You know what I mean? He got a yellow wife beater that he brought from the old country. Just chilling near the wall, cigarette in his mouth, just like. That guy's a gangster, man. And he just cusses casually in Cantonese, just like. Any of you guys speak Cantonese here? A couple of you guys. I was born in Hong Kong. That's my first language. I love that language, right? I think it's the most fun language to speak because it's the most fun language to cuss in. In Cantonese, you can just like low-key casually cuss. Like you go to Chinatown, you see like a nice old man walk by. He would just be like, right? That sounds really nice, right? But what he actually said was like, oh, fuck your mother and hope your whole family dies. That's Cantonese, man. You gotta love it. You gotta love it, man. In a relationship, I think it's important to know how you convey love, but it's just as important to know how you receive love. You gotta be vulnerable and let your partner do nice things for you. See, I'm not very good at that. I'm
you.